Welcome back to the Wall Street Podcast. Today we're diving into some fresh research from Morgan Stanley.
That's right. We're looking at their report, Fun Bites, Labubu Entering World of Fashion Moynat, Marko Monroe, Naomi Osaka, came out September 12th, 2025.
In this report, it really digs into Pop Mart's IP, Labubu. That's ticker 9992 on the Hong Kong Exchange. Specifically, it's looking at Labubu's, strategic moves into high fashion collaborations, celebrity endorsements.
Exactly. So our goal here is really to break down the financial angles for you and, the wider market impact.
Okay, let's jump right in. The report talks a lot about Labubu's recent fashion crossovers. Moynat, the luxury brand, is highlighted.
Yes, integrating Labubu designs into their handbags, accessories, pretty high-end stuff.
And then there's the Marko Monroe connection. Custom Labubu design.
Yeah, custom pieces. For stylists working with people like Lady Gaga, Naomi Osaka, and Osaka, she actually showcased a jewel-made Labubu at the U.S. Open this year.
Wow, okay, so that's quite the visibility boost. It really underlines Labubu's, diverse appeal, doesn't it? I mean, kids to adults, east to west.
And the price points reflect that, too. You've got a $10 toy on one end.
Right.
And then these huge human-sized figures going for, like, 150,000 US dollars.
That's a massive range.
Yeah.
So what's driving this? The report points to Kassing Lung's designs.
Kassing Lung's designs, absolutely. But also Pop Mart's operational muscle. They call Labubu a kind of creative medium.
The creative medium, meaning?
Meaning it sparks a lot of user-generated content, UGC. People run with it, create their own stuff, share it.
And that just amplifies the reach organically.
Precisely.
Which brings us to the rating. Morgan Stanley's sticking with Overweight for Pop Mart.
They are, and the valuation is based on a pretty punchy target PE multiple, 42 times for 2025 earnings estimates.
42x. What's justifying that?
Well, the report cites sales momentum, both in China and overseas. Expanding product lines, these IP-focused initiatives we're talking about.
Improving margins, presumably.
And an expanding net profit margin, yeah. That's the projection.
Okay, but there are risks. What are the main ones they flag?
On the upside, faster than expected overseas growth could push things higher. Success in new areas, too, like toy bricks or maybe silver jewelry.
And the downsides?
The usual suspects, really. A weak macro environment hitting consumer spending. Uncertainty around new products. Will they catch on? And, potential trade tensions always linger.
Right. So let's explore that valuation a bit. That 42x PE is steep for something that started, essentially, as a toy company.
Yeah.
How exactly does this diverse appeal justify that kind of multiple, beyond just saying more revenue streams?
Well, I think the report suggests about scalability, the ability of this IP to resonate across generations, across cultures, and crucially, across value tiers, from pocket money toys to luxury goods and art.
So it's not just selling more things, it's the nature of the IP itself.
Exactly. It suggests Labubu can access markets and command price points that traditional toy brands just can't. It functions across these different cultural spheres, pop culture, high fashion, art collecting. That potential is what drives the re-rating argument, justifying, in their view, that higher multiple.
Okay. And what about the celebrity side? Marko Monroe, Naomi Osaka.
Yeah.
How does the report see that translating into actual financial leverage, especially this user-generated content angle?
It frames it as a powerful sort of self-reinforcing cycle. These high-profile placements, like Osaka at the U.S. Open, they don't just advertise Labubu, they inspire fans and creators.
They generate buzz, people talk, people share.
Right, loads of UGC, which acts like free, highly credible marketing. It builds community, deepens engagement, and crucially for the financials, helps accelerate that overseas growth Morgan Stanley points to as a key upside risk. Less traditional marketing spend, potentially more organic growth.
Makes sense. So, given the overweight rating and the high expectations, what's the single biggest hurdle or factor that could derail this, according to the report? Especially as they push into new areas like toy bricks or jewelry.
It really comes down to execution, I think. The report emphasizes the need to consistently create appealing new products that resonate. Diversification into things like toy bricks or theme parks is great on paper.
But you have to deliver.
You have to deliver quality and maintain that brand relevance across very different segments. If they stumble there or if the broader economy really tanks, that's where the biggest downside risk lies. It's about maintaining the magic while scaling up.
So stepping back from the pure financials, this Labubu story, moving from collectible toy to luxury item, feels like part of a bigger trend. What should you, listening, takeaway about how IP is changing consumer behavior and, well, brand value.
I think it shows a fundamental shift. Seeing Labubu on a Moynat bag or as a serious art piece, it changes how people perceive the IP. It's not just a toy anymore.
It elevates it.
It elevates it into this hybrid category, fashion, art, collectible. It pulls it out of niche collector circles and puts it into mainstream luxury and lifestyle conversations. And that reflects this broader trend where IP isn't just licensed, it's actively shaping product categories and influencing everyday consumer choices. Brand equity is becoming much more about the power and reach of the IP itself.
It really does blur the lines, doesn't it, between art, fashion, collectibles, even investment. This deep dive shows how quickly that can happen with the right IP and the right strategy. So, maybe the thought to leave you with is this. How many other IPs, perhaps currently seen as niche, are sitting on the verge of a similar breakout, ready to redefine value in ways we might not expect?